131. Oliver Slope is with Blue Line Futures. And Oliver, I had a chance to read through some of your notes this morning, and you mentioned, first off, on soybeans, $10 break is inevitable, and you also said the bulls are going to try to defend that 395 to 396 on corn. How are we going to do
it? That's a good question. Right now, the corn market is more or less a stick in the mud. It seems like, yeah, we are weaker and we've been marking lower highs, but the velocity of the selling has certainly cooled off. So if you're looking for a silver lining, potentially that's it. But obviously, if you're a producer, you really want to see more than just a slow bleed lower, right? You want to see some higher trade above some technical levels. And what's going to do that? I'm not really sure. Maybe we just have to wait until next week's USDA report. We've started to take a look through some of the analysts' expectations out there. We know the bar is set pretty darn high for some of these production numbers for corn and soybeans, which leads me to wonder, are we kind of setting the bar too high where there's room for disappointment? I don't know, to be determined. But historically, the USDA isn't really quick to make any sudden adjustments either. So I think a lot of this is going to be riding on next week's report. Until then, we probably just chop around.
Yeah, Oliver, I'm again so glad you mentioned that, because if you're going to set the bar higher and USDA is going to miss, don't you want that bar a little higher so that they'll come in and give you at least something that appears to be bullish?
That's exactly right. And if you look at the prior years, it's really been the opposite of that, right? There's been more concerns and more problem areas out there where the bar was set low and it was easy to overcome those expectations. And that's what put pressure on prices, this time of year over the last couple of years. This year, it's almost the exact opposite. The bar's set really high, and rightfully so. I know there's a lot of good looking crops out there, but will it be enough to live up to the expectations, and how much of that's already priced in? I guess we'll probably get a better idea of that next week.
Oh, and with the bar set so high, what happens if USDA comes in above that? We could have a mess on our hands next week. Well, it's not quite a mess, but let's look at the cattle market. We'll also dig into hogs and touch on what's happening in the energy markets. Oliver Slope in Chicago back as Market Day Report continues. 377. Let's bring back in Oliver Slope, Blue Line Futures. And Oliver, you were there to see trading of oil at that level, right?
That was wild times, certainly. It's nice to see that we're not doing that anymore, knock on wood. But yeah, you've mentioned oil trading higher, and I think it's interesting to note that we're also seeing some other safe haven assets catch a little bit of a bid. Gold and silver up sharply in today's trade, and it kind of makes me wonder if there's not some geopolitical risk being priced in ahead of the weekend, where nobody really wants to be caught short markets like that if something were to happen over in the Middle East.
Okay, when we kind of wrap things up for today, again, not a whole lot going to happen in the cattle markets other than what we could see in cash cattle trade. Any chance we'll hold on and not give up some of the gains we've had over the past few months?
Oh boy, the futures market's telling us that they're expecting the cash market to soften up. The cash market's been really resilient through a lot of ebbs and flows here as of late, but it feels like there might start to be some cracks on that end. When that plays out, to be determined. But I'm still, a little bit pessimistic, even after this big break that we've seen in futures here recently, as there continues to just be a lot of dark clouds looming over this market, from rumors of plant closures to the election concerns potentially, kicking up some dirt, and the slower economy. Those are all things that I think are going to keep would-be buyers at bay, or managed money, aka funds, kind of on the sidelines until we do find a little bit better value. And I'm not so sure that we're at those prices yet. We saw what happened last fall when we took a nosedive lower. Thankfully, this year funds aren't aggressively long like they were. Last year, they were long about 120,000 futures and options contracts. This year, about half of that in the live cattle market, 60,000 contracts. So the risk of long liquidation isn't what it was last fall, but the 60,000 contracts is still a big position. And if we continue to get softer economic data, again, the buyers probably aren't going to be there, and there'll probably be more on the sell side tightening up the risks.
Yeah, and packers can't lose money. They're set up to where they can manage that side of it. Oliver, great to visit with you. Thanks again for stopping by. Oliver Slope, Blue Line Futures, and that's kind of how we wrap things up today.
Wrapping up, of course.
Hi, I'm Oliver Slope, Vice President and co-founder of Blue Line Futures. Join me on my journey for this year's Pro Farmer Crop Tour, August 19th to the 22nd. I'll be on the eastern leg, which starts in Ohio, goes through Indiana, Illinois, into Iowa, and then up to Minnesota. I'll be sending out my normal daily grain market commentary as well as special updates from my findings on my route throughout each day. Sign up for these updates by filling out the form on this page, and we'll send you one of the best looking koozies around. And I love corn koozie, because who doesn't love corn? Thank you, and I look forward to you joining me on my journey.